In today's video, I am going to be talking about Kevin O'Leary. Yes, Mr. Wonderful himself. Basically, we're going to be breaking down some of his top 3 stocks that he has in OUSA, which is one of his ETFs that he runs through OShares. Now, if you don't already know who Kevin O'Leary is, I don't know what rock you're living under, but basically he is an absolute lover of dividend stocks because they have brought in more revenue for people over the last 20, 50, and even 80 years than regular stocks themselves that don't pay dividends. So let's get down and let's check out these 3 stocks that he has in OUSA. So this is his website, and that is the ticker for his US Quality Dividend ETF. And his top 10 holdings in this ETF is Microsoft, Johnson & Johnson, Home Depot, Procter & Gamble, Verizon, Merck & Co., Apple, Cisco, Pfizer, and Honeywell. However, today we are going to be breaking down these 3 and seeing if it's a good investment for us without having to invest into this ETF, or should we just invest in this ETF? Well, let's check this out. So as of today, it is currently trading at $37.50. So as of the time of recording this video, we are at $37.50 per share when it comes to this ETF. Its trading volume is actually quite high for an ETF. We're looking at 70,000 plus shares per day. So it is a pretty good liquid ETF. You can get in and out as fast as you would like, but generally with ETFs, you want to trade them over a long period of time and not daily. However, it is only giving you a 1.97% yield, which is your dividend, and that is quite interesting considering it is a quality dividend ETF. You would expect that dividend to be a bit higher. So the biggest stock that they hold is Microsoft, and when it comes to Microsoft, yes, it is a great volume stock. It has a ton of volume. 29 million shares traded per day on average is crazy. From there, we want to look at the dividend, and of course, the dividend is quite interesting. It is only 0.98%. However, when you want to look at just the dividend, that doesn't give you or paint you the full story. You really want to look at the 5-year chart of the stock, and we can see that over the past 5 years, we can see that it's traded from just over $50 a share to $227 per share. So you're not just getting this for the dividend, even though it is paying a small dividend. What you are getting is insane growth over that period of time. Can Microsoft continue with this growth? It's actually kind of hard to say. So they do have their own server business, and they do have a lot of software, plus they do run, of course, Windows. Is Windows the best operating system in the world? In my opinion, it's not, but everyone does have a different opinion. And that is what makes Microsoft great as an investment when it comes to long-term growth, because a lot of companies use the Windows software, Windows operating system, to be able to conduct their business. And let's face it, if you wanted to switch from Microsoft to, let's say, an Android, Google type operating system, it's going to take a long time and a lot of money to transfer over everything. Same as if you wanted to transfer from Microsoft to Apple, or if you wanted to go from Microsoft to a different type of operating system altogether. It does take time, and generally companies just want to save money and not change. And that is where Microsoft gets a lot of their earnings from. It's not from the consumer market. They get a lot of money from the business side of their business, the B2B version of their business. And we can see that they have been killing earnings, of course, from the pandemic. Everyone working from home, they have inflated earnings. Can this continue? It is quite interesting to see if it can, but they do have a 4-year history of increased earnings. Next is Johnson & Johnson, and of course they do have the COVID vaccine shot. And when it comes to their share price, we're looking at $156 $36 per share at the time of making this video, and they do trade an average 8.2 million shares per day. They do have a larger dividend at 2.5%. So if you're looking for a great way of investing, having some great growth with a good dividend, then this may be a fantastic choice. Over the past 5 years, we can see that they have traded from about $110 per share up to $150. So in 5 years, we can see that it's had roughly a 40-ish% increase in share price over 5 years with a dividend of 2.5% currently. Then you're looking at a pretty good stock for the long term. And of course, anything that happens in the past, it's always hard to say if it's going to happen again into the future. But when we start looking at things like that COVID vaccine, and the style of shot that they are using for the COVID vaccine is quite interesting. They can actually slightly tweak it so that now we no longer get the seasonal colds that we get. They can actually tweak it potentially over the next 10 to 15 years to make cancers and things like that not around anymore. Our bodies it's basically genetic manipulation that they're doing in these vaccines, and because of that they can actually manipulate our bodies to do really anything. Something that kind of was interesting was how Elon Musk said that we could actually tweak this vaccine so that we could actually make it so that we just don't get older, which is kind of interesting once again. And of course, Elon Musk is somebody who is an engineer, but he's not a medical engineer, so I'm not too sure how far you can actually take that information, but it is kind of interesting to say the least. So I personally think that Johnson & Johnson may have a great outcome from this vaccine and could help fuel future growth, of course, if they continue to fund things like these vaccines. What is somewhat interesting to me is the most recent quarter wasn't as much of a blowout as we would have thought. However, they do have 4 quarters in a row of fantastic earnings. And going into the first quarter of this year will be interesting because they did handily beat it last year. Can they do that once again this year? That will be quite interesting. You could do a short-term play, of course, when it comes around earnings time. And anytime you do a short-term play, what you really want to see is, hey, does that short-term play work? And if it does, you can hold it a little bit longer and see if you can get even more income. Of course, as a dividend play as well, you can make a lot of money over that time. Now, Home Depot is an interesting choice currently because, of course, Home Depot has been doing extremely well during the pandemic. Everyone's at home, and of course, when you're at home, you say, well, I need to have a better bathroom. I'm stuck at home. I'm tired of looking at that or this, and you need to change it. So that's why Home Depot is a great choice. They have good volume so that you could get in and out pretty quickly, and of course 2.5% again on the dividend is a fantastic choice. When we look at the 5-year chart, we've seen that they were hit really hard thinking that there was going to be a massive recession until everyone found out, hey, they're actually doing really well, and I think that this is great consolidation for this move, and I think that it could move higher as long as their earnings continue to do well. They did not do very well in the second quarter of last year, which is kind of interesting, and I wonder if that will continue in the second quarter of this year. But they did have 3 quarters of better than expected earnings, and of course, when it comes to revenue and earnings, they did do extremely well last year. So out of these 3, I think J&J is the best choice. What's your best choice? What's your thoughts? Leave a comment down below. I hope that this video has helped you, and I will see you guys in my next video.